So give us a sense. We do have Reddit and Astera right in front of us as we speak this week. But are we seeing perhaps a break in the log jam in tech IPOs?
Investor appetite is as strong as it's been in a very long time for IPOs. Part of that is because there really is a dearth of growth technology assets in the public market that are at scale today. And if you look at all of the public tech companies, over $2 billion market cap, less than 30 have growth rates over 30%. So investors are looking for opportunities for growth in the IPO market.
So is there a profile for the companies that are most likely to be successful? Because Reddit's very different from Astera. Those are two very different companies, right?
Well, scale matters to investors. We saw, some of the carnage a little bit from the 2020 and 2021 IPO classes, where IPOs were priced at pretty significant premiums to where the multiples have been on a historical basis, and then traded down significantly. The ones that had the smaller market cap, smaller float, were disproportionately impacted, and for that reason, the scale really matters in terms of revenue scale. The second piece is growth rate and the interplay between growth rate and profitability. So it's important to have kind of a balance that works. Growth, you get paid more for growth, but that's only if the unit economics work and there is either a break even or a very strong near-term path to profitability. You'll get paid more for growth. If the business is not growing, 30% or north of even 20%, then having very significant margins and visibility and durability of those margins.
Has the definition of significant growth changed? I mean, given when you see something like an NVIDIA, some of these growth stocks in tech have just been really, really strong.
Yeah, so I think for an IPO, I would say a growth stock is something north of 20%. 30% plus is really very differentiated growth rate, but that's how I would think about it today.
What's your sense of the pipeline out there for prospective IPOs in the tech area?
I will tell you, we're tracking over 200 companies that we really think have a credible exit in the public market, or entry into the public market, I guess, over the next 2 years. They could also be, sold to strategics or to sponsors, but that's kind of the cohort of the private companies that we're highly focused on for potential IPOs over the next 2 years.
It strikes me you might be looking at two very different revenue models. If you have a consumer-facing product, such as Reddit, for example, what the consumer can do, what they can afford, how much they spend could really affect it. On the other hand, if you're over in the artificial intelligence, if I can mention that term, area, that's more of a business-to-business and need for semiconductors and things. Are there two different revenue models here?
Yeah, I'd say that investors right now are anything that's AI and anything that is security related are probably the two areas that have the strongest bid. The consumer facing stuff is a little bit more challenged in terms of a multiple. You're just not getting the same multiple as you get for an enterprise sale that has those two kind of end markets. AI, we're just at the beginning of a decade-long shift and change to what we can do from a productivity standpoint. And so we've seen a lot of the stocks that are being, that are really being driven by the advancements in AI trade up significantly, and that will continue, I think. There are going to be fits and starts and play times where investors think, okay, this has been a little bit overbought, take a little bit of profit taking, but I think by and large this is a decade-long plus shift.
What about regulation? Is there a prospect of regulation, particularly in the tech sector? We certainly hear about it from Washington a fair amount. Is that sort of a cloud out there on the horizon for investors?
Well, I think, companies and governments are talking about this a lot. It's hugely topical, not dissimilar from what we faced with the explosion of social media, right? But this is obviously more pronounced because it's impacting enterprises in a meaningful way. So I think it's going to ultimately end up being a combination of self-regulation from some of the enterprises with government oversight to some extent, but it still remains to be seen. It certainly is a question.
But it's difficult for an investor to really discount that, is it not?
Yeah, it is. And I think it's more about, what's the low-hanging fruit in AI? Some of the productivity tools, for example, versus moving into, what what the art of the possible could be in 10, 20, 30 years.
It strikes me there's been something of a fallow period here with tech IPOs. It's not been as robust as before. Do you expect it to turn around, and if so, when?
Yeah, I do. I mean, you're right. Last year there were 5 tech IPOs. A typical year there are 40 tech IPOs, and this is just in the U.S. I could see this year with the election kind of looming later, in the fall, I could see 20 plus tech IPOs, and that's more about a readiness standpoint. Like the companies are actually have everything ready to go to where they could hit the market in the spring, summer, leading up to the election, and then we have very few windows kind of post-election with Thanksgiving and Christmas holiday and the winter holidays. So I could see a 2025 IPO type year for tech. I think in next year is where we could see kind of a return to the 40 plus, maybe even 50 tech IPOs.
Well, I wonder, we've had a fair amount of uncertainty about interest rates. We know where the Fed is this week, but we don't know where it's going to be next month, for example. How is that affecting IPOs, and what do you project?
Yeah, I think the thing that affects the most are companies with leverage. So some of the companies coming out of private equity firms that may have been highly levered, and then solving for what the right leverage profile is for the company on a public basis. How much primary capital do they have to raise to bring net leverage down to a level that doesn't scare investors because of refinancing risk, for example, in the high yield market. And so that's the one place where I think it's impacted a little bit, and specifically, but I think we're coming out of that. It's a much more positive tone around leverage for investors because it feels like we're going to start, taking interest rates the other way. But other than that, it's more macro. It's less about business specific and more about, what does this do to the market overall.